Hey, good morning, everyone. Brian Hoops here with Midwest Market Solutions. This is Market Insider TV. This is our opening commentary. It is Tuesday morning, November the 12th. Good morning, everyone. Hope you have had a nice night. And looking forward to today's trade activity. Government offices are back open, and we should expect to see some export sale announcements this morning. If we do, we'll send them out on our text service, our Twitter feed. So you can sign up for those at our website, MidwestMarketSolutions.com. So in addition to government offices being open, that also means export inspections today, as well as crop progress this afternoon. We look for corn and soybean harvest to be virtually wrapped up, winter wheat seedings virtually completed, and good to excellent ratings for the wheat market to improve this afternoon. So let's get into some of the overnight trade as we have the dollar firming up once again, 33 points higher, new high for the move. Gold down a couple dollars, silver right now a little bit firmer. Stock market is steady mixed to lower with crude oil seeing a turnaround Tuesday type bounce. The corn up 3 cents, beans down 2, and the wheat has mixed, down 1 in Chicago, or down 1 in Kansas City, up 1 in Chicago. Kind of a slow overnight trending type marketplace. So here we go. South American weather remains nearly ideal for corn, soybean seedings, and development. Now, the biggest corn crop is the second seeded safrinha crop, but that's about 80% of their production. So what they've planted in the corn right now, only about 20% of their production overall. So not major any concerns at all for the corn, for the soybeans. The soybean crop is what's really going to attract the attention if we have any type of poor weather. But weather really looks ideal, and it looks like they're going to have a monster crop of soybeans coming on. There's good rains in the forecast for the next 7 days for Argentina and Brazil. And here in the U.S., hard red wheat areas have received some really good rains, the best rains since last spring. That'll improve conditions as we go into dormancy. And we should see not only improvement this week, but next week as well. On the charts, there's a potential double top on the December corn at 434. Now, we're close to taking that out in the overnight with a close at 433. You could negate that double top pretty easily today, and I think we probably will. I do want to mention that grains peaked on November the 15th last year amid favorable growing conditions in South America. Now, it wasn't all of South America. If you remember, Argentina was very dry, and that pushed a lot of demand for soybean meal to the United States. We don't have that same situation this year. It's nearly ideal in Argentina as well as Brazil, and that's kept soybean meal futures near their contract lows. Overnight, we mentioned beans were down, soybean oil down pretty sharply, palm oil drop. We saw bean oil be really the strong price leader here recently, but I think there's considerable risk to the downside for soybeans, maybe not so much for the corn market right now, but the soybeans, I think there is quite a bit of downside risk. One of the reasons why we don't think there's much risk to the downside in corn is the spread between Dec and July narrowed to 21.25 overnight. It was at 38 cents back in August and September. So this is, considered carry in the market, or the carry is now just negative 21 cents. Dec under the July. Wider the carry, more bearish you would think it is. The narrower the carry, more bullish for a general standpoint. So it's narrowing right now, and this tells us that the demand is hot and heavy for the crop right now. My feeling is we could have some weakness as that second safrinha corn crop begins to take hold. So if you're a producer, I think you take advantage of that strong exports that we've seen right now. You take advantage of this narrowing of the basis. This is potentially bullish, but for the front months, not so much for the back months. And this first corn crop in Brazil, as I said earlier, not that large. That's why Mexico and a lot of these countries are really coming aggressively to the United States and buying December, March deliverable corn. This week's cattle fact show list, it's only up 400 head for a total of 218,000 head. The cash calls are steady at best right now. Box beef was slightly higher on Monday amid slowdown in the kill schedule. Only killed 112,000 cattle yesterday. And with that slowdown in the kill, means usually that we'll see boxes improve. Maybe we can have at least steady cash trade this week. Exports last week increased by 37 loads. And at 700 loads, box beef sold for export last week increased 149 loads from the same week compared to a year ago. Year-to-date sales for export, they're 1,201 loads. below last year at 37,804. So a decline of about 3%. We've kind of narrowed some of the difference between this year and last year in the recent months. So we'll look for cash cattle, be steady, no trade yet today. Probably going to see some choppy action. Goldman roll still going on. There's some spread trades, I think, to be made in that cattle complex. And if you have questions on that, feel free to give us a call. This has been Brian Hoops for Midwest Markets. Have a great day, good luck, and good trading.